Hello, I'm Bernard Hickey from interest.co.nz and welcome to another in our series of double shot interviews. This is where we sit down with a minister or a CEO or someone who is very interested in interest rates and the economy. And I can't think of anyone who's more interested in interest rates and the economy than Alan Bollard, the Governor of the Reserve Bank. Welcome to interest.co.nz.
Thanks,
part of the reason we're here to talk to Dr. Bollard is his great book, Crisis, One Central Bank Governor and the Global Financial Collapse, which was co-written with Sarah Gaetanos, which I see, Governor, has just got into the bestseller list in non-fiction in New Zealand at number 6, just ahead of Alison Holst, but behind Mr. Ellis.
Behind Mark Ellis, yeah. We haven't quite got to the Kiwi bloke level, but it's pretty hot.
That's right. Hey, I was very interested in the book, as much because it's quite a candid behind-the-scenes affair, and I was curious, why did you decide to write the book? It's quite unusual for an incumbent central bank governor.
It is unusual. It's a little bit risky. I had to be careful what I put in there, and the stuff that I couldn't put in there. I had to be very careful about respecting confidences and respecting confidentiality, because it was such an incredible story. And it was a story that we partly participated in, but thankfully largely observed happening in other countries that were worse off than us. If we'd had all the stuff that the US had to put up with, I wouldn't be writing that book. But as it was, we came through it, a mixture of skill and luck and other stuff. And I reckon it's an interesting story, and I wanted writing it to say, look, there's sort of technical stuff in this, but there's human stuff as well. It's a crisis, and in a crisis stuff happens. It's not all nice. People suffer. And here's a bit of a slightly personalised as well as a professional story.
Take us back then to that week, the second week of October in 2008, when you describe in your book it was a very bad week in a very bad month. What was happening between yourselves, the Treasury, the government, the financial markets, and how nervous were you about the financial system?
Yeah, well, it was a bad week. I mean, basically leading up to that, a few weeks previously, the US investment banking industry had imploded. With Lehman's and then a whole bunch of sales of other banks and so on. And that was just an unbelievable occurrence, and it happened so very, very fast, and they were all trying to sort it out over weekends. But of course, New Zealand is where the markets open first in the world, so we're on the front end of some of that. We'd watched that happen. We didn't have that same sort of investment banking problem in New Zealand or in Australia, so we thought, well, that's them, we're us. But we had, by that stage, we were noticing that we were getting phone calls from banks and from cash companies saying, could we have some more $100 notes, please, and could you do it pretty quickly? And we don't like to hear that at all, because that means one thing, which is that people are getting edgy about that. It wasn't a bank run, we didn't get near that, but we did have to respond with extra supplies. And like I say, we take that very seriously, because if you do get in a bank run, it's very, very hard to stop. So people were getting worried about that, and at that stage we started thinking about designing a deposit guarantee scheme. We didn't want to do that. We knew it would be nasty, distortionary, there'd be moral hazard, there'd be bad incentive structures, there'd be gaming, all of that sort of stuff, but we thought we had to be prepared. Now, when I say we, I'm talking about the Reserve Bank and Treasury and the Minister, and we were pretty much of a single mind in all of that. Then stuff started closing in on us, and of course what happened was all the problems in Iceland. Then Ireland put in place a deposit guarantee scheme. Then Britain said, we've got to do it because the Irish have made us. And then we got some information out of Australia saying we're going to do it because the British are making us. And at that stage we didn't have much choice. Unfortunately, it was a very difficult time from a parliamentary, political, constitutional point of view, because Parliament had been dissolved leading up to the election. And in fact, on the Sunday we're talking about, the Labour Party were about to launch their election campaign. So, that is a very difficult time to do this in. What we were looking at was, again, I'm not talking just about the Reserve Bank, but about Treasury and the Minister. We were looking about the Minister using his special powers under the Public Finance Act to do this. And normally that would be laid in front of Parliament, but Parliament wasn't sitting. So this was all tough stuff, and we had to, in a very short space of time, suddenly make the scheme go real. And when Australia let us know at a very late stage that they were doing it, we thought we had until the end of the Sunday to make it work, because we knew it would be very easy for funds to go out of the New Zealand system into the Australian system, and it would have happened on Monday morning
That
at
must
9
have been
o'clock.
that must have been some weekend.
So we were all working, of course, non-stop through that weekend to try and make it work. We'd done quite a bit of testing and checking and preparation, so we were able on Sunday night to trigger our 0800 numbers, and we had staff working on that at 6 a.m. on Monday morning, and we had a large number of phone calls from both the industry and worried people about all that on that Monday and then the next week.
Do you think we would have had a bank run if we had let the Australians go ahead and do one and we hadn't done one?
Well, we would have been in a very difficult position because money could go out of the large New Zealand banks into their Australian parents or sometimes into the Australian branches just seamlessly. And in addition, you can only speculate what would have happened to finance companies, building societies and credit unions if people had felt that they weren't safe.
Do you think, though, we needed to include finance companies? Because, as we've found out, some of them have fallen over.
Well, we couldn't risk not doing it because if we hadn't, they would have potentially all have fallen over all on that Monday morning. And we still do have some good finance companies left, even though the business structure of a number of them has just looked very bad.
Just going back in time to April 2005, when Peter Costello, the then Treasurer in Australia, came out and in your book you talk about how he essentially told New Zealand bankers, including yourself, to get real. The Australian banks owned the New Zealand banking system and Australia should regulate New Zealand's banking system. What was that meeting like and what happened next?
Well, that was at an Australian New Zealand Leaders Forum in Australia, and we were a little surprised at just the strength of his attack on that, and I think the rest of the New Zealand contingent there were as well. And it was a time when we were talking about how much regulation there should be of the New Zealand system, and the banks were pushing back, saying you don't need to do this, APRA's regulating these things, you can just take it, have them do it all. And we were making a distinction between, well, yeah, they're Australian owned and they're regulated well in Australia, but that's not the same thing as saying that our financial system has gone to Australia, and that I think was a distinction that the Australian Treasurer didn't make. He said, you've sold the banks, we own the system. Now, we felt, and I'm sure we feel vindicated in that New Zealand needed to have its own ability to handle, control and buffer as required its financial system, even though a lot of that is operated by Australian banks. Of course, we've got plenty of non-Australian banks as well. I mean, we've got nearly 20 banks in New Zealand. We've got big international ones and small New Zealand ones as well. So that was a pretty important point to make, and in a way, he actually solidified, without meaning to, he sort of solidified New Zealand feeling about that.
And I understand you and others within the bank argued strongly against that, and eventually the decision was made to solidify New Zealand regulation of New Zealand banks, even if they're owned by foreign companies.
Well, nothing had to happen legally in that, but we were at that time pushing against the Australian operators here and saying, you've got to be subsidiaries, and one of them wasn't, it was a branch. We've got to sort out offshoring and local sourcing and so on. We need to sort out stress testing, and we need to do some more getting them into the Basel II fold in terms of capital. So there were a bunch of things, and some of them were going to cost them, not a lot, but it was going to cost them a bit, and we didn't want to put costs in their way, but we did think it was important for New Zealand. And we were certainly very pleased a few years later that was in place and that we could do stuff.
Do you think the result of the crisis, that crazy week in October, would have been different if the Australians had regulated our system?
Well, the Australian banking system held up very well through the period, and that's partly good regulation and good management by the banks. It was also some luck. They hadn't got into subprime, same here. Reasonably vanilla systems. What are they doing in both countries? They're largely borrowing offshore to fund mortgages in Australia and New Zealand, not entirely, but largely. So that's a system that you can understand and is much easier to regulate and provide liquidity for than those complicated Northern Hemisphere big international banking systems. What we wanted to be able to do was to make liquidity available that required local securitisation of residential mortgage-backed securities. Could that have been done if we hadn't had some of those powers? I'm not so sure that we could have put liquidity into the system. We certainly also wanted to be clear that if things got really bad, we could bolster the New Zealand system, even if the Australian system was going in another direction. Now, luckily, it didn't come to that. We also found, and the banks themselves found, that their funding was much more vulnerable than we'd thought. And when those term international capital funding markets closed down, or nearly closed down, around the end of 2008, we all got a surprise then, and that's when we needed to be able to provide liquidity. We had to provide it to the New Zealand system. We wouldn't have done it for the Australasian system. Would the Australians have done it for New Zealand? Don't know.
After that, you introduced the core funding ratio, which essentially says to the banks they have to have 65% of their funding for now in long-term maturities or with local depositors. Do you think, and the Reserve Bank of New Zealand was one of the first to do that, do you think that has been a factor in calming the situation, and do you think there's the potential to increase that further?
Yeah, that was one lesson that we did learn from the crisis. The lesson was that funding is vulnerable and very short term, and we felt we needed to push it longer term. The liquidity policy, the core funding ratio, does that. The banks actually were heading in that way already. So did we make the difference, or did they decide to do it? Hard to say. They've done it. They're actually further up the core funding ratio than they need to be at the minute. We still look at it going a little further, but we don't want to stand in the way of credit through the recovery. So we've always said we'll watch that very carefully. They've done it. Now we've got Basel III, the international re-regulation of the industry going on, and they're proposing something pretty similar, although at the last minute they've pushed out their timetable quite a long way, so you don't have to be fully there internationally, probably until about 2018. That's a long way away.
Do you think they've done enough with Basel III?